afterwards. All right, so now we're
I
recording.
have a question.
Sure.
Um, well, I have two actually. My first question is as far as stocks, as far as fractured stocks, like buying partial shares of stocks as opposed to buying full shares of stocks. Is that feasible to buy partial shares?
I'll get into stocks. So I'm going to hold your question aside as I explain what that really looks like, okay?
Okay. And my next question was like with 401ks, since a part of a 401k is invested on the stock market, right? And then it can go up, you can lose part of your 401k. So I'm worried, have questions about the 401k too.
Absolutely.
Okay. Thank you.
You're welcome. Other questions? Somebody might have a burning question like, I thought about this. I want to ask that question. Feel free to bring it up.
So I do have a question.
Go ahead, George.
I want to I'm looking to invest in AI. Do you have anything on that?
And when you say investing in AI, what do you mean?
Uh,
In
uh
this in companies that, on the stock market, or you saying purchase AI products or apps?
yeah, product and apps as well. But also looking to invest in like in a company as well that uses AI.
Okay. So stock market.
Yeah.
Okay.
Are we going to be talking about the currency? Like, is it crypto
Crypto.
currency?
I'll cover crypto.
Okay.
Okay. So I want to lay the foundation, something that maybe you may have been exposed to and may not. But I'm going to share my screen. So if you can confirm that you can see my screen right now, you may have to move your video aside or something, but just to make sure you can
We
see my
see a
screen.
white screen. I
It's a
see.
white screen. Yep.
Yeah.
Yes.
Okay.
Okay.
So did I hear Juanita on the line?
Yes.
All right, Juanita, welcome. All right, so this is what I'm gonna start with. How many of you all ever heard of a trust?
Yes.
I've heard of it. Don't have one. No, I don't.
Understood, but you heard of a trust.
Yes.
Yes.
I don't set up trust, but attorneys set up trust. And I start with the trust because let's say when I teach finances, I told a story about Hilton Head, South Carolina. Hilton Head, South Carolina was owned by black people and they lost it. As you can see, how they commercialized it and hotels and everything else.
Mm.
And black people said, do they understand what they're getting themselves into? The weather concerns, the hurricanes, all that type of stuff. And they just sat back and watched them freak out because they weren't used to that kind of weather. Whereas the black people that lived there knew about the hurricanes that could hit that area, and but they could not pass it down. Why is that? Because there was no trust in place. And so whenever you're thinking about finances, we could have investments, we could have houses, we can have all that type of stuff. But if it's not protected by trust, it can be snatched away from you. Okay. So I'm gonna show you the power of a trust. And you might be like, how does that have to do with finances? I'll show you. It's gonna all come together. So what we have here, kind of a T diagram, and at the top here, we'll have operations. On the other side, we have our assets. The operation side is how we make money. The asset side is where's the money going? Investments, insurance. Anybody else? Anybody want to give an example of what could be an asset?
Your home.
And someone said your home. I'm going to say property.
Would a car be considered an asset?
I'll explain how a car can be your asset. Operations is how we make money. But we'll go here. We'll say a business. So that's where your LLC comes in, your incorporation comes in, and even your W-2 income is part of your operations because that's how you fund your lifestyle. That's how you live. I'm going to point you over here. I'm going to say PR for personal residence. Now make it like a house. Oh, that's a horrible house. Tells you I didn't do good with drawing in school either. But anyway, that's your personal residence. So whenever we think about finances, we have this diagram that we will look at because where are we putting our money? How are we investing our money? How are we protecting our money? And setting up a trust is a great idea because that is a way to avoid probate court. Are you all familiar with probate?
No.
Okay, so when a loved one passes, if they have any of these assets, the court gets involved with the distribution of their assets. And it can take sometimes it could be rather quick, and in other times it could be rather a long process, especially when there's multiple family members involved that could have a interest in the loved one's assets, like a house. And they think that a will would be enough, but a will, and I'll put it over here. So we have probate, which is basically the court. And this is basically under the state. So they'll distribute the assets the way that they want. If you have a will, the will can be contested in court. Why? Because it's not a formal entity. The will is basically a piece of paper that says how you want your assets distributed. However, a trust is an entity. That's what makes the trust stronger and avoids probate. And I'll specify irrevocable trust. The irrevocable trust is something that we as a community should understand how it works and even look to having one set up. The irrevocable trust also helps you to avoid taxes. If you owe taxes upon your passing, if your assets are within that trust, the trust does not owe tax money. So the government can't even take your money because it is owned by the trust. The trust then have beneficiaries attached to it, which then you can pass those assets to your beneficiaries without having to pay the IRS or any other bill that may be associated with your social security number. I don't want to go too fast. Does anyone have any questions, any comments, any relatable um, instances that maybe you've seen this happen?
I haven't seen it happen, but this is good to know because I didn't know that. Yeah.
So could I use my name as a trust?
So a trust is a separate entity. The way you name it, uh, you basically would discuss it with the attorney, because basically it's a whole separate EIN number versus your social.
Okay.
Okay,
So you would do the trust through an attorney.
correct. And not just any attorney. A lot of times, when people don't know what the trust should be, they may go to any attorney, and sometimes the attorneys are not setting it up properly. You might think that's weird, but I've seen it happen where we had to clean up the trusts that were set up for a particular client. So it's not all created equal. Um, so yeah, but an attorney can create a trust. I'm gonna show you something on my screen. If I go to the IRS website just to help you understand a little bit more, you can see my screen. When you apply for EIN number, you have here that says trust. So the attorney will go to the IRS website to set up a trust, but to get that EIN number. And you see irrevocable trust is here. But you can see there's other types of trusts like conservatorships, custodianships, guardianships, and they can explain the differences, but your goal is to get the irrevocable trust. Again, this is to educate you. This is not just to say, go get a trust right now, but just to educate you, to help you understand as we're talking about finances, this is one of the foundations of finances that we need to talk about in our community. So let me go back to my little chart here.
I have a question, Donald. So it
Sure.
has to be done through an attorney?
Correct.
Okay.
Because of the legalities that come with it. I'll give you an example. If you were incapacitated, the trust will be designed for you to invoke certain things without you being aware of what's going on. That because you were in your right mind at the moment, you've already went through um, the interview questions to help the attorney know how you want to set this up. Nothing will be done outside of what you already approved. So yeah, it's all legal um, documents that would have to be completed to set up a trust.
Okay, I have a question. Um, so when we get an attorney to make the trust,
Hmm.
they have to be an attorney through our state, or do you have a recommendation of like a good attorney to do our trust?
I do have I have like two individuals, or actually three, who works in law, that can basically be someone to leverage that. So yes, I have access. And the reason why, like for me, because I know accounting, I know taxes, I had to evaluate what type of attorney understood the whole estate planning. So we were talking about overall, this is estate planning. This is what this is. This is estate planning. And part of your estate plan, if we ask you, do you have a trust? Great. Let me see the documentation that's related to that trust. Now, I'll give you an example. So, my grandmother and my grandfather, they're up in age. My grandfather's in his 90s. My grandmother is close to 90. And sometimes, being a professional in the field of accounting, tax, and sometimes even attorneys, it's hard to convince our own family members. So I'm just telling you, I don't have my clients as my family members, but I was concerned about their assets. And so my aunt, who is my grandmother's daughter, when I mentioned to her about setting up a trust for them, she said, "Oh, we have our own attorney." I said, "Okay, what did they say?" "Oh, they don't need a trust."
Mm,
Why? And then when I found out that this attorney works for free, yeah, they work for free. Why? Because they go to probate, they
mm,
make money from your assets upon your
mm,
death. So they
mm,
don't have a vested interest in you getting a trust. So, an example of someone that I can't help in this area, meaning setting up a trust, I have someone that's retired and said, "Donald, I was told to contact you. I want to set up a trust and I need one because I know that this money is worth something." I said, "Okay, tell me about your assets. What do you have?" "Nothing."
mm.
Sir, I'm not even gonna waste your time because you don't have a house, you don't have any assets to protect. You just have money, a foreign currency you're hoping will shoot up in some near future. It would cost you just about as much as you have that foreign currency to set up a trust. I don't want to do that to you.
Mhm.
And so on another note, I felt like, wow, this guy worked all these years and don't have anything. So as we're talking even like this, he has pretty much nothing there. And don't be ashamed if that's you. I mean, they didn't teach this stuff, okay?
Right.
Unfortunately, we'll get into that where they told you put all your money into this and you'll start getting money in retirement, all that stuff. It's
Mhm.
crazy. But anyway, but yeah, so you have to have the right attorney that understands estate planning and will set up a trust for you the proper way. So as we break open this conversation a little bit more, um, have you all ever heard of Robert Kiyosaki, Rich Dad Poor Dad? Does that ring a bell?
Yeah.
Yeah.
Okay. So I work with a certified financial planner. A certified financial planner looks at your whole financial picture, considers all your goals. What are you trying to accomplish? When are you trying to retire? And just so you know, because we're believers, if you study Hebrew, there's no word for retirement in Hebrew. God never meant for us to retire. You might be like, what do you mean? The world system was created for us to retire. Let me show you what I mean. This is a term that some people have heard of, and many people haven't. It's called Marxism. Have you all heard of that term before?
Yes.
Okay. Tell
No.
me what you know about it, Lashandra.
Oh, I don't really know a lot about it. It's just something I just remember from school. Um,
From school. Who told you this?
I don't know. I just remember hearing the term.
Anybody else want to take a stab at it? Or think you know? Okay. Let me explain. Marxism comes from a guy named Karl Marx. I may have his last name spelled right, but just forgive me if I don't, but it's Karl Marx. And Marxism is when you're born, you go through school, you basically come out of school, you pay taxes, you work and you pay taxes as a W 2 employee, and then you retire from the system and then wait for you to go. You know, that's what this is Marxism. So we're programmed to think that we're supposed to retire, but Karl Marx created that system. So going back to scripture based, God does not mean for us to retire. Maybe it is I become an advisor. Maybe I share wisdom. Maybe I have a course for people to follow. Maybe, people can come to me for counsel, wise counsel. We don't become wise counselors until we get some experience, right?
Right.
You can have educated knowledge, but sometimes you don't know what somebody going through unless you've been through it. I mean, you know what I'm saying. But ultimately, you have wise counsels that may not have gone through anything we've gone through, but they're wise counsels. But I'm just saying, in general, what happens to all that knowledge that our seniors, our seasoned folks have gone through? What happens to that knowledge? We need it. Would
Mhm.
y'all agree?
Yes.
Yes.
So yeah, it may not be coming to a 9 to 5 every day, but we need that knowledge. So, you're not going to waste. It's more so, how can I now advance my knowledge and share it with the next generation so they don't make the same mistakes as I've had? And there's ways of doing that and still making money, perhaps, or just serving the community in some ways. But going back to this is why we have to see, well, how can we make our money work for us? So let me speed this up a bit. So we make money, 401k, stock, those types of things. When we look at Robert Kiyosaki, so I love to hear from Robert Kiyosaki. Why? Because he does not subscribe to having stock 401ks. You might be like, Donald, but we just asked you questions about it. Let me explain why. Those products, 401k, let me move this down. 401k is a tax code. Did y'all know that? Anyone knew that?
No.
No.
So some of you may have heard of a 403b,
Yep. Right here.
Mm-hmm.
IRA.
Mhm.
Yeah.
All of these are tax codes. And most people don't even know what none of that stuff means. All we know is if we take money out before we're 59 and a half, what happens if you do that? Do y'all remember?
You have to
The
pay
tax on
Penalties.
You pay that 10% penalty
Mhm.
unless
Mhm.
you meet the qualifications to avoid that penalty. Like, for example, buying your first house or paying the IRS. They won't charge you a penalty if you're paying them. But you're going to pay a penalty for taking money out of those accounts before you're 59 and a half. So they're tax codes and they're highly regulated. We also call these qualified accounts. These are qualified accounts. So what happens is if you have money sitting in your 401k right now and you wanted to take that money and put that money or any of these accounts and you wanted to put that money into a regular savings account, that would trigger a penalty if you're under the age of 59 and a half. If you're 59 and a half and older, you won't have that 10% penalty. But a savings is a non-qualified account. Oh, and also I'm a professor. I teach accounting at University of Maryland Global Campus. I forgot that part. But so yeah, so that's a non-qualified account. If you put it in your checking account, is that a qualified or non-qualified account?
depends on how much you have in there. Oh, counted
No,
it.
I'm referring to accounts, right? So I'm wondering,
Mhm.
do we put checking account in this qualified account bucket, or do we put a checking account under the non-qualified account bucket?
Non-qualified.
Correct. So you have your checking account. One time, and I'm educating you about this. Why? Because I took money out of my 401k and I was putting it into a Roth IRA. At the time, I wasn't fully familiar with the difference between the two. But the bank, I told them I did not want to pay taxes. I wanted to just transfer it from one account to another. But when they transferred this money from my 401k into my Roth IRA, I got a bill, or I got the 1099-R. Are you all familiar with that term?
Yes.
So yeah, so whenever you
Yeah.
take money from your retirement account, you get this 1099-R to show either you transferred it into from one qualified account to another qualified account. So if I moved it from a 401k into another qualified account like an IRA, I don't have to pay the penalty. And that's totally fine. But what happened is she moved it into this Roth IRA, and I didn't realize that she moved into the Roth IRA. So I got this 1099-R in the mail that said that it was basically a regular distribution, normal distribution, and I had to pay that 10% penalty on that money that I transferred.
Wow.
And I left that money in the Roth IRA. So today that money's still in here. I never took it out because I never felt like I didn't need it. But at the same time, that transfer triggered a penalty for me, and I had to pay income taxes on it because it was classified as income. Okay, so going back up here, looking at this structure, this 401k and stock is not a a tax code. But what stock is money that you're taking out from the stock market. And what happens is, one of you pointed out, and I think that was Miss Tingle, that when the stock market goes down, what happens? You lose your money, right?
Mm-hmm.
So these accounts will be considered volatile. They're risky, which is fine on one hand, but on another hand, back in 2009 when the market crashed, many people lost their money from their 401k.
Mm-hmm.
They lost their money from their 401k. And what happens is we're taught to put money there. Oh, let it sit there, let it cook, let it be fine. But then yet we're subject to market risk, hoping that the market bounces back. And what if it doesn't in time? What if you lose your money? Are you okay with that? I'm not saying don't invest in it at all. If you want to, like the AI, if you want to invest in a company. However, I'm gonna show you the difference in investing in non-tangible assets versus tangible assets. Okay? I'm gonna show you what the wealthy does. Let me ask this question. Do y'all want to do y'all want to know what the wealthy does?
Yeah.
Yes.
Yes.
Okay.
Yeah.
So I'm gonna teach you what the wealthy does. So we're talking about assets. So if we're gonna invest in assets, what is one of the things that stick out that we were talking about is an asset?
Homes.
Your homes. Your house.
Homes. Okay. Your personal residence. I'm gonna say PR versus I'm gonna say investment property. So personal residence versus investment property. Your personal residence is not an asset. Do you understand why? Anybody understand why your personal residence would not be an asset? Okay, let me ask the other question.
It's not making you any money.
Oh, wait a minute. Hold on. Let me go back. Don't give me. Hold on. Miss Linda ready to teach us in a second. Hold on. Why do we believe that our personal residence, and forget that she said that. I'm just saying, I want to know, why do you believe your personal residence is an asset? There's no wrong answer. I just want to hear what your thoughts are.
I guess because it's considered, because you can borrow against it.
No, that's
I
good.
guess people think you can refinance,
Mm-hmm.
use it as collateral.
You're giving some really good context. That's all true. And that's what we were taught. But if
Mhm.
we go back to what Linda said, because you're not making money off
Money.
that
Hmm.
property, So I was going to give where I would say a condition. It's conditional. If my property is not an asset unless I use it to make money, meaning I'm renting out my basement,
Mm.
Ooh.
I'm renting out a room. It could be where the person enters only in the property through a certain area and they don't have access to the rest of the house. Now my house becomes an asset. Okay.
Mm-hmm.
So I went down this path because Robert Kiyosaki, I mentioned him because this is what the wealthy does. They don't like stocks. That may seem crazy, but they don't like stocks, but they like tangible assets. And I'll show you the reason why. So your personal residence is not a tangible asset unless you're renting it out. So we're just going to focus on investment properties. Okay? So we want to invest in properties. Well, Donald, I heard that renting is dangerous or risky because what if the renter doesn't pay the rent? Well, that's why you don't get into it as a broke person. And so,
Mm-hmm.
you
Mm,
can leverage other people's money. Y'all heard that term before, right?
yes.
Mm-hmm.
Give me an example of other people's money.
The banks.
The bank. Let's stop right there. The bank. If you wanted to rent a property, if you wanted to invest in a property, you would the loan process to rent a property is different for investors than it is for you to buy it for your personal residence. Okay? It's different. I'm gonna show y'all something very powerful if I have time. How much time do I have?
All the time you need.
Oh, thank you. I won't hold all your time, but I want to make sure I get through this. So, investment properties. Yes, you can leverage bank money to invest in properties, and you want to have a cushion. So, say like for example, you get a loan for $100,000. Donald, what do I do with this money? Well, don't buy a property that is right at 100,000. Buy a $50,000
Mm,
property
mm,
that you can leverage that remaining balance if you get a renter that falls behind on their rent,
mm,
just in case you need to fix something. You don't want to buy a property that is at the top of your loan value.
mm,
So I'm just giving you an example because yes, people can fall on hard times. And that's happened. And let me tell you, one of the places that is very challenging for people to rent is in DC. If you are an investor and you have property in DC, DC has like the strongest protection for renters, not the investor, but for renters. And it's almost as if the person can live in your property for free for as long as they want to in DC, which is crazy. So I have clients that say, Donald, I sold my property because I can't do this. But when you look at their finances, of course they can't because they don't have the income to sustain a loss like that. So let's just give you some context. But investing in properties, what is another asset? Somebody mentioned it earlier, and I didn't write it down, but I just want to make sure you know what else could be an asset. What else could be an asset?
Your life insurance?
Life insurance, exactly.
Valuables.
I'm gonna talk about life insurance really quick. You said valuables.
Yes. Gold.
Okay. Oh, yes. I'm glad you said that. Okay.
Mm.
These are what the wealthy focus on.
Mm.
Okay. Um, so
Mm.
with life insurance, the reason why people put money into life insurance and you know, as far as the wealthy like avoid the stock market is because your money can grow, you can take it out and it's tax-free money. We
We
want
want tax.
tax-free. If we can get tax-free money, wouldn't we sign up for that?
Yeah.
Absolutely.
The problem is, and I'm gonna tell you something that's real. The problem is when we put money aside in these things like life insurance, we tap back into it like it's a savings account. I need my money. Listen, I got bills to pay. Christmas here. There's no way I can put this money aside and don't touch it. That'd be the problem with the 401ks. People put their money aside and they charge all this money because they're taking it out. It's not really doing what it's supposed to be doing. So it's like we not even doing what we're supposed to be doing with it anyway. And I see people invest in the stock market and I would say at our level, meaning commonality, we're not millionaires. Maybe there's a millionaire in the room. So if there is, thank you for being a millionaire. But I had to cover it from a general perspective that, you know, we're looking at this like the everyday person, the everyday person. When you put money in the stock market and you already being taxed, and I'm sure if I said, give me a show of hands, how many of y'all owe tax money? Many of your hands probably go up and be like, man, I just had my taxes done and I owe money.
Mm.
If you take money out of the stock market, what happens is it's going to increase your income. And then you're going to pay taxes on that money. So that's part of the other reason why the wealthy would avoid the stock market because they're trying to have something that they can have as tax friendly, a tax friendly asset. Your gold and silver is another one. Why? Because the our dollar used to be backed by gold. 1970s, they took it off the gold standard and now it's considered a fiat currency. So our currency is trash. Did y'all hear what I said?
Mm-hmm.
Mm.
Our currency is trash. They use our currency or they use us to make money, make this trash that's not worth anything. People are spending hours working for trash. I'm saying to you what they know it is. That's all I'm doing. I'm not, you got money, great. But this is what they know it is. It's not worth anything. How do the wealthy get wealthy? Because they use other people's money. Bank loans. I'm not talking about personal, I'm talking about business. Okay.
Mhm.
A business loan is different than a personal loan. Why? Because a business loan was more than likely and should have been used for business assets, like buying a vehicle or buying products, buying um going to a conference to get more contracts. Like it's used to build business. That's what it's for. So you continue to build with a business loan versus if it's your personal loan, you just bought it to buy stuff. So it's a little different. Um so that's gold, silver. You're not getting into gold and silver to take it out, to spend it, but it's to have something protected for your future. Bitcoin is another. Um, I'm not saying put all your money in Bitcoin, but that's another area when she mentioned cryptocurrency, just to have something somewhere else. Because the government is transitioning the dollar system to a digital currency. So eventually our dollars is going to go away anyway. But how soon is that? I don't know. Could be 2028 by that point. Some, you know, we don't know. But yeah, Bitcoin is another one. So let me give you an example of how investment properties work. And I'll use a vehicle. Vehicle also could be an asset. Someone mentioned a car, I think.
Mm.
Let me give you an example of Why is tangible property a good investment? Does anybody want to take a stab at why tangible property would be good to invest in?
Because could it be because it's something you actually can get your hands on, that you
Absolutely.
actually have?
Yeah. Say, like, for example, if you invest in Apple, you're like, Apple is doing well in the AI market and Apple's doing this. You put your money into Apple. Guess what Apple use that money for? They'll use it for
Let me
this is just some examples of what your money's being used for in Apple. But what if you didn't want your money going towards their payroll? So anyway, but yeah, that's Apple. Let's just give an example of what they do with investments when you invest in those businesses. But tangible assets like a property. Let me give you an example of how property can work. You can become a millionaire with property if you get the right property. Your biggest friend with property is depreciation. You all heard that term before, right?
Yes.
You can depreciate the property. Let's say, like, for example, if you made 200,000 from rental income.
You can use a lot of stuff. Almost get that 200 out.
Repeat that again, Linda.
Now I was going to say you could write a lot of things off from that.
You can.
Mhm.
Exactly. I'm gonna show y'all something very powerful in a minute. So when you say write off, I'm gonna show you all something. Um, Follow me for a second. I'm going to show you because seeing it in picture helps you understand what she means by writing off a lot of stuff.
Whenever you fix in that property, there's a lot of things you could do.
You're exactly right. Do you have rental property, Linda?
No,
Okay.
I dabble in taxes.
Oh, okay. Another tax expert here.
I'm
So this is called a Schedule E. So with the Schedule E, we list the name of the address of the property. I'm trying to see if I can highlight something. So in A at the top here, so under physical address of each property, can you see me highlight that?
Yes.
Mhm.
Okay, so that's the address of the property. So it on here it only lets you list three, but there's a supplement section if you have multiple properties beyond three. So don't worry about the limitate. There's no limit on how many you can own. You can have way much more properties. Um, and it asks about type of property under this section. It also talks about how many days you rented it and all that stuff. But as Linda was mentioning, if we have here rent received, and those that are in the music industry, royalties received because, or maybe you're an author and you have published work out there, you're getting royalties. So they treat that as property as well. So you can have intellectual property. But I won't get into intellectual property. We're talking about property houses. Um, so you have rents received. As part of your expenses to lower your liability, you have advertising that you can write off. Like if you list the property on some sort of um, platform that people can go to find the property. If you have travel, auto type of expenses, cleaning and maintenance, so you may need to send out cleaners to clean the property. Commissions, that's an expense. Insurance, you have business insurance as well as residential insurance or property insurance. I mean, legal and professional fees, your accountant, which I which I fall in that. You have an attorney, management fees. So in other words, the IRS incentivizes you to have a property and to have all these things. You can write it off. But the biggest part about all of this is depreciation. Depreciation, why is that one of the biggest tools that help you with real estate investing? Because you did not spend any money. That's classified as an expense, but that's your golden ticket. Whatever this property, because you know anything depreciates, right?
Right.
As soon as you drive a car off the lot that you just purchased, it could be a brand new car
Right.
costing you $50,000. The minute you drive it off the lot, it's your car. That car is depreciating that very moment. It's depreciating. So if I'm calculating depreciation, let's say like for example, I might can depreciate this property at $25,000 every year for the next, what is it, Linda? How many years can you depreciate residential?
Yeah, I think it's 5, for sure.
Residential property?
Mm-mm.
No.
Let me
Hold
look.
on.
I don't.
So
I
you're
know Google's
saying it's your expenditures concerning the investment property because you're putting more out? Is that what you're saying? That you come out on top?
yes. You come out on top because you can depreciate this rental property. Um, isn't it 27 and a half years?
Mm.
I see numbers all day and sometimes, yeah, 27 and a half years.
Yes.
If it's commercial, it is 39 years, I think it is. So if you're using a property, yeah, 39 years. So yeah, I had the numbers in my hand, but I don't like always leaning on my hand because I'm like, I want to show you real information. Make sure you can follow along and I'm giving it correctly the first time. So 27 and a half years if it's residential, 39 years if it's commercial. So say like, for example, if you want to set up a hair salon in the property and you're like, hey, I own this property. I could depreciate this property over 39 years because it's used as commercial because there's a business in this property. You can do that. So depreciation is your friend because it offsets the income that you have or that you made during that year. You can't do that with stock. Does that make sense?
Mhm.
Yes. Yes.
So your tax. So what am I dealing with? I'm dealing with your taxes because when we're thinking about money, a lot of times we're not considering the tax part of what we're dealing with or what we're investing in. When we look at the taxes as it concerns the stock market, for example, we find that our taxable income increases and then we're paying more money in taxes. And we're like, man, my taxes went up. Yeah, because you had this investment money. I see it all the time. But what can we do to even invest in property? Position ourselves. What do I mean? The government, many people don't know this, but the government, y'all heard of the term affordable housing?
Yes.
Yes.
They don't want people on the street. Okay, let me give this information to you because I know I'm giving a lot of information. I hope y'all taking really good notes. And I'm glad I'm recording this. The way the government is set up, meaning the IRS, the tax code, 99.9% of the tax code is written for you to save money in taxes. Linda, can I get an amen?
Yes, it is.
They just don't teach it.
Exactly. And if you don't know, they're not going to tell you.
So how does this relate to biblically? Look, the thing is, when God's okay, what is God's original language? I got the believers here. What is God's original language? His original language is
Hebrew.
Hebrew.
True. Yes.
Y'all know that, right?
Yes.
When the word was written, when you talking about the Old Testament, when the word was written, it was originally written in Hebrew. Y'all know Hebrew is written in many forms. What is one form that Hebrew is written in?
Well, I don't know.
Come on. When you look at Hebrew, how is it written?
Like numbers or
Numbers. Numbers is big with Hebrew. Numbers take on meaning. Y'all know that. Like three. What does three represent?
triple, try.
What is it?
Like the triune God.
How about seven?
Completion.
How about 12? That's not a trick
Is that
question.
perfection?
He had 12 disciples for a reason. So all I'm saying is that Hebrew has meaning. Symbols, numbers,
Mm-hmm.
pictures play a huge role. So God written this word in a code for us to dig in and study. The first Bible verse it says what? What is the first Bible verse in Genesis?
In the beginning.
Thank you. Stop right there.
Mm-hmm.
In the
Yep.
beginning, if you look at that in Hebrew, you can tell the whole dynamic of the beginning to the end just with those three words. In the beginning, just because of the pictures, just because of the numbers, just because of what's associated with that word. In is Bereshit. That's what it's called in Hebrew. So Bereshit tells us that Christ will come and redeem his people, save us just from that three words in the beginning. So God wrote his word in codes. So you know the kingdom of darkness trying to emulate the kingdom of God, right?
Right.
So what do
Yes.
they do? They put stuff in codes for you not to understand it because it takes somebody to study it to understand it. And what does the Bible say? Study to show yourself approved. So he sends those of us that have studied it to share it, just like the scribes were supposed to study the word of God and share it with the people. But we already know what happened with the scribes. But anyway, so when I say, God, what do you want me to study? He told me accounting. I'm like, for what?
For the numbers. Hebrew.
Why do you want me to know taxes? Because it's a code. And some of us are called to share that code with other people and show you the power of leveraging the gold. But they keep it hidden because they know if they don't tell you about it, what happens? You're going to pay the most money in taxes. What was the last thing I said?
That
You don't.
we don't know the code.
So you're going to do what?
They're gonna
Pay
Pay
leverage
more
money
money
in
in
Most
tax.
taxes.
money in taxes.
money.
And remember what I said about Karl Marx. Isn't that what I said he designed that system for?
Yep.
Mm-hmm.
So let me get into this a little bit more because I'm trying to take you through this advanced knowledge without taking up all your time, but I want to make sure you get some key points here. So, um, so the government incentivizes affordable housing. So if you have a house that someone can afford, there may be certain programs as an investor that you can be a part of to get government funding to help you with providing affordable houses to people, right? So that's a blessing. But it's all about tapping into that as an investor because they set the system up for leaders, for people to be in position to be wealthy leaders, positioned to provide housing. You know, so most of the time we have people complaining about certain things because they don't understand it, and you'll hear them say the rich get richer, the poor get poor. Of course they do, because why? When the government print money, the poor get poor and the rich get richer.
Yep.
And I said when the government print money, Linda, you said yes.
Mm-hmm.
See, I got somebody right here to understand. Thank you, Linda. Linda trying to take over. See, young like Linda, you want to teach this class? I'm just joking. No, I'm glad that Linda can vouch for that because everybody don't know that. But yeah, so when they do that, that's what happens. And so that's why it's important to invest in like real estate. But I would not invest in real estate without making sure that I have everything else set up properly. My own finances, making sure that I'm in a position to get funding from a bank, for example. Find out what do we need to do, educate ourselves, join like the Chamber of Commerce, find out what they're talking about, find out what banks are offering, what kind of programs are they offering for people that are investors. Getting this information, don't just jump into it, but get information. Find out where it's best to have investment properties. And we can look at AI as a solution to give us that information as well and leverage it with a real estate agent. Are there any real estate agents in the room? Okay, if there aren't any, I'm sure we know one. But we can always talk to a real estate agent. Is this a good investment property? Because some places may not be good to invest in. We need to know that. But yeah, so this is just one area. How can your vehicle be an asset? Somebody
can
said assets or property can be an asset if we're using it to make money. How can you use a vehicle to make money?
be a tax.
Transportation service.
Yeah.
Transportation services.
Medical transportation.
Mhm.
Yep. Anything that you can do to leverage that to make money. Yes. So you have people that may have a vehicle and they put that vehicle on an app. Y'all know which app I'm referring to that you can rent vehicles?
Yeah, I was getting ready to say people are running.
What is it called?
In ways that created more opportunities for Black people within the context.
I don't know that.
It's kind of mute. It's kind of coming across kind of like staticky. What was that again? I'm sorry. I want to hear that.
Oh, okay. I think somebody had their
Okay,
wasn't muted. Okay.
I got you. So Turo is where you can rent your car to an individual like myself that's looking to rent a car, and you get paid to rent your car. Let's say, for example, you put your car on Turo. How much is a typical car note? Give me an example of a typical car note.
$500.
So $500 a month. But you rented your car on Turo for, let's say, $89 a day. If you rented your car for about 15 days out of the month, you think you made your car note?
Yep. And then some.
And then some. And guess what? You can depreciate this vehicle.
Yep.
Just like you could with the property on your taxes. Hire a car. I'm just showing you how you can invest in tangible assets and make money, serious money, and avoid paying a lot of money in taxes. Hire car is for people that want to drive for DoorDash, Uber, blah blah blah, but they don't have a car, so you can list your car, hire a car as well.
Hmm.
They can rent your car and pay you for renting your car. Same thing. You keep that car rented, let me tell you something. You can aim for about 10 grand a month.
Mhm. So interesting.
Now, of course, you got to do your research because Maryland is not a big area to do Turo. You can, but the right kind of car. Let me ask a question. I'm just thinking from an investor standpoint. If you were to buy a car to rent on Turo, what type of car would you want to invest in to rent on Turo? Give me an example.
Um, can't think of an Ultima, Nissan Ultima.
Nissan would be good. Anybody
Mm,
else?
Something like a family van, like something big.
yeah,
Something big? Okay.
Yeah, a SUV.
yeah.
SUV. So let me give you an example of Turo, okay? Because again, this is something that you would want to do research on. Some locations are better than others. But let's say like you go on Turo and I'm gonna put, would it be reasonable to say Baltimore or should I say what area would you want me to put? I'd rather look in the area where you live in.
Yeah, Baltimore.
Go
We live,
ahead.
You
You
want me
can
to do
do
Baltimore?
Baltimore, yeah.
Okay, I'll do BWI. And we're gonna look for cars on August 8th, and we're gonna rent it out until August 11th. Let's see what we find. So when you do research, you can find out how many trips these cars have taken. This Chevrolet Corvette 2025, they just bought it. It's been on one trip, and it is going to cost us a total of $682 for those days. Ford EcoSport 2021. We don't know when he bought it, but it's been on 54 trips.
Mm.
This Mercedes Benz, 41 trips. 2022. Lexus, 19 trips. So we can kind of see how many
mm,
trips these cars are taking, like, because that means how many times they rented. And this is in the BWI area. Um, and I would say if I'm an investor, I'm looking at which vehicle would be the most likely vehicle that I can keep on the road.
the Kias. They could
Kia is rented a lot. Chevrolet Trax.
Chevrolet.
That Chevrolet Trax have been on the road a lot. 62 trips and it's 2025. Um, BMW only 3 trips. Uh, this X5 2022, I don't know how long they've been here, but 61 trips, but I'm just this RAV4 2021, 113, but they could have been on this site for quite some time, so I don't know. But you can see more details as far as that. But I'm looking at how many, because I'm looking to invest, and I'm like, okay, if I invest in a vehicle, I want something that's really going to be on the road a lot. They're gonna look at the Tesla. They're gonna rent the Teslas. This Jaguar, again, I don't know how long it's been on here, but 95 trips. They probably used it for prom and other special things. Who knows? This Subaru hasn't been rented yet. But it might be. It says new listing, so you can see that. But why am I looking at this? Because I'm trying to see what I want to invest in to rent. And when I see like multiple trips that seem like it's within a certain time period, that might be something I want to put on here. And Tesla's normally one of those ones that get rented a lot. Why? Because they're electric vehicles, save people money in gas. So I wouldn't do like a high-end vehicle unless I want to take the risk of it not being rented as often. But I want something that's going to stay rented, like a Camry or like a Kia, something basic. And but if you were in Miami, which you could do as well, I would want to put like the BMWs, the Mercedes, the
Mhm.
Teslas, the cars that people will want to go down there and rent when they go to Miami to show off.
Right,
So from an
right.
investment standpoint, I'm doing research. So again, anything you invest in, you want to do research. Most often when people investing in stock, you're not doing research with the companies. Why am I saying that? Because I've audited AT&T, for example. I've audited Armstrong Flooring. We had to publish reports that would go be published on SEC's website as well as the company's website. So you as the investor can see if the company has good internal controls or their internal controls needed to be improved. You don't know the status of the company, you don't know their going concern. So and when I say going concern, you don't know if the company has any concerns about lasting over the next 5 years. If people knew that Toys R Us was going to go out of business, do you think that they would have still invest in Toys R Us? Or let's say
No.
the restaurant
Mm-mm.
industry. If you knew that Red Lobster was going out of business at some point or they were closing some stores, am I going to continue to invest in Red Lobster? Or say like Starbucks? If I knew that Starbucks was having challenges staying, relevant for this market and they were closing some stores, am I going to continue to invest in Starbucks? So when we think about
Yeah.
the stock market, we don't know the makeup of this company because we're not reading their financial reports.
Mr. Butler, can I ask a question?
Sure.
With the Turo and the hire car, as far as insurance is concerned, if they would get in an accident, total your car, do you have to have a contract written up with certain specifications in it when you would rent out your car? How does that work? And with
Oh,
your
that's a
insurance
good, that's
company?
a really good question. So with those kind of when you list it on their website, there's an insurance that you would basically have to cover if anything did happen with that car. Let's say somebody crashed it. Normally the insurance, depending on the nature of the insurance, you read all the fine details, can cover replacement of the vehicle because they know that that could be a risk.
Okay.
And and to the point about investing in the stock market, what happens is these companies produces their annual reports. So if I want to look at their annual report, they say annual letter to shareholders. That means you, if you want to invest in their company, annual report right here. I've created, I've put in um my share of information to go into these annual reports. This is why I'm like when I've done financial audits, what I've done. And in this annual report, it would tell you what exactly was the auditor's concerns, if there were any. And as you can see here, as I keep scrolling, I'll find the audit firm or the accounting firm that did the audit. It's a lot of information, and we have to be careful of wording. There was a lot of things that we had to put in these reports, but I'm gonna give you some examples of what we have. Wait, I want to go back up here. I saw something that could stand out. There's a headline here. What's in this line? Please read this. What did I write in? What did I highlight here?
Risk related to supply chain.
Do you know what that means?
What they think might happen because
So from an audit standpoint, we want the investor to know what are the risks related to the supply chain. The company has to get their supplies from somewhere. So we're talking about coffee. So what would be the supply chain that we're concerned about?
Coffee beans.
Correct. So if you read this report, increases in the cost of high quality Arabic coffee beans or other commodities or decreases in the availability of high quality Arabic coffee beans or other commodities could have an adverse impact on our business operations and financial results. So if Starbucks could not access the coffee beans, because it's their business. It could impact their financial results. Their operations could shut down.
Mm-hmm.
Just because we see Starbucks on half of every corner and it's easy to order there does not mean that they have not addressed or have encountered or talked about the issue of accessing high quality Arabic coffee. Now, did you even know it was Arabic coffee beans?
No.
What if you didn't like Arabic coffee beans? What if you thought that Arabic coffee beans were poison, but you're investing in Starbucks stock because you heard it was a good stock to invest in?
Mm-hmm.
Why I share this? Because somebody still probably had it in the back of their mind, but I still don't understand it. Why should we read it? Find out the information. Find out what's going on with these companies. Don't just invest in something that you haven't done research. But that's why we've done the audits of these companies because we have to disclose this information and the risk around certain things so you as the investor can be aware. I'm trying to find the signature on here just to kind of like give you an idea of who signed off on this report. Um, but all of this information is public information. I'm going to stop sharing just so I won't waste your time with this, but I'll quickly look at it. Any questions so far based on what I went over? Anything?
So what can a novice or first time, a person that wants to invest, and you don't have thousands and thousands to invest, what do you do?
So let me ask this question. It's funny, I'm gonna answer your question with a question, but because I knew I was gonna get that, and I was prepared to talk about that. Um, and as I answer that question, let me just share my screen really quick because I want you to see what firm audited Starbucks. I told you when I first started doing audits, when I got into this industry, my first employer at the Big Four CPA firm was Deloitte and Touche. This is where I worked at first. Deloitte and Touche. I learned a lot there. And a lot of this information that's in these reports is stuff I would write up and I would include in a report. And we had to be careful wording. Like say, like for example, I couldn't say we looked at all because we didn't look at all transactions, but we selected a sample of transactions. So certain things we had to say to protect ourselves from legal issues for these reports. But I'm gonna share my screen to talk about how you can get set up as a novice. What I'm gonna paint the picture is this is called the cash flow quadrant. The cash flow quadrant. They don't teach this in school. Let me ask this question. I said I was going to ask a question with the question. So, Linda, how much people
Yeah,
be paying in taxes when
I'm
you see
sorry.
their when you see people W-2? How much do you see them paying in taxes?
What do you mean?
Federal income tax. Like if you look at their W-2, how much would you see like somebody to make 100,000 paying federal income tax?
100,000.
Yeah, you can give me an estimate.
About 13, anywhere from 13 to 18,000. One was 24,000 one year.
Mm-hmm.
Mm.
So before I get into go too far with this, I'm gonna define what this is. So this first box is employee. Okay. Employee, you already know what this is. W-2 income. This here, self-employed. Self-employed, someone that is a sole proprietor. They're driving for Uber, DoorDash. Could be a personal trainer. So these two pay the most money in taxes. And I'm saying this from a common, we can relate to it, we've heard it, that Donald Trump said he didn't pay any money in taxes, right? And you have mixed emotions. He should pay his fair share in taxes. And then you get people to say, well, I don't want to pay money in taxes. I want to be like Donald Trump. Forget the person. I don't care about the person. Do y'all want to pay what she just said, $24,000 in taxes?
No.
No.
Tell me why you don't want to pay $24,000 in taxes.
It's a lot you can do with that 24,000.
Right. Exactly. Let me
But
go over
then
here. Go ahead. I'm listening.
no, I was gonna say you work hard for your money and then you have taxes deducted and all kinds of things deducted, and then you have to go and pay, more taxes.
How many of y'all work for the government? Anybody work for the government on here?
Mm-mm.
No CIA people?
Oh, we couldn't tell you if we did.
Nah,
Let me
I
be
don't work.
careful what I say. No, I'm joking. I used to do artists in the government, so I did artists in the government. But anybody that work for the government or don't work for the government, doesn't matter. The government is the biggest capitalist of the world. And we're okay with paying the government. Why are we okay with paying the government so much money?
Mm.
Because we've been programmed to think that way.
Yeah, they made it, so it's okay.
And then we use the Bible verse that Jesus says, render unto Caesar what is Caesar's. He didn't mean it that way. Like, just give it to them. Give them what they're due, but you don't give them your house. Um, they set up the system to for you to save money. Why not use it? So, yes, when someone says, what if you're a novice and you want to get started? Part of what I'm looking at is my financial picture to see what am I paying in taxes.
Mhm.
And that's just when I asked Linda that question, that's just federal.
Yep.
Is anybody living in Delaware?
Oh, that's
Or
the worst state to live in.
say it again.
Delaware is the worst state.
Okay, that's a whole nother story, right? But I ain't getting into that. But I'm talking about from a state tax perspective. Anybody live in a different state?
I live in Delaware,
You live in Delaware, so
but
you're
yeah,
avoiding.
but I work in Maryland. Yeah,
Okay,
You still
so
have to pay
I know.
yeah,
Mhm.
yeah, yeah,
because they don't have an agreement like Virginia and
yeah.
Maryland.
They don't
They have an agreement there. Delaware doesn't. Yeah.
exactly. Yeah. So then you
Wow.
have state tax.
Florida doesn't have state tax.
Correct. Yeah.
Wow.
So
So
you
are
think about all this.
are you
You think about all the taxes you're paying. You're paying federal, state. What else taxes are you paying? You paying
Social
sales tax,
Security, FICA,
Social
Everything.
Security, Medicare.
too many taxes.
So you see, they're taxing the heck out of you.
Yeah.
Yeah, no,
You
no.
make money and you're
Tax on
paying
tax.
taxes. Say it again.
Getting taxed on the taxes.
You get taxed on the taxes. Right. It's so much. So I'm showing you something. On the business side, owning a business. What are your write-offs for owning a business?
Materials like tools,
Yep.
equipment.
Advertising,
Yeah.
insurances. Depending where your business is, you could be paying rent.
Yeah.
That's good. Good. What else you can pay? You paying the employees or contractors.
Yeah, I was getting ready to say employees. Paying everybody.
So guess what? In your business,
Write it all off.
if you have the right people, you don't even have to work.
Mm-mm.
I just want that to sit for a second. Do y'all have any questions? Y'all thinking about this? What? Because business can be your other avenue to investing.
Mhm.
If I take my 24,000 that I paid in taxes over here, plus everything else that I'm paying in taxes, and I shift it over to let me invest in business. I'm lowering my tax bill. But see, it takes us, you gotta strategize. You can't strategize by yourself. You have to have a tax strategist like myself to work with you to figure out what makes sense in your case. It's a case by case situation. So when I have an employee over here that says, Donald, I'm paying so much money in taxes, how can I reduce my tax bill? Well, do you have a business? And the answer is no, we can't write off anything. Not much, unless you put more money into
401k.
that you want to take out because it's like a savings account. Is this making sense?
Yes.
Yep.
Yes.
Makes total sense.
Okay. But when you start a business, like me, I have an accounting firm. I have all this stuff. I have to buy whatever, whatever. Now my taxes, I can write off federal, state, sales tax, Social Security, Medicare. I can write it off on my taxes for my business.
Mhm.
So that's why I don't care. Let me write this in a legible way. My ex-wife told me the other day, she said, you still got that chicken scratch. I said, you still got a mouth.
Funny.
We're cool people. We're cool people. I don't want to make it sound like we're not. We're definitely cool people. So when gas goes up, why would it matter to me? I don't care. They can carry gas up as much. I don't want to pay that much money in gas, but it's a tax write-off. Why?
But
Because
you
I have
got
a
a business.
business.
Right.
All right. Question. What does the I stand for? Take a guess. We talked about it. I'm giving you a hint. We talked about it. So what do you think the I stand for?
Investment.
Investment. This is considered the inside investor. Inside investor, real estate, gold, vehicle, tangible assets. You're the inside investor. It's a difference between insider investing, where you get in trouble for stock that you weren't supposed to be investing in, that you knew what was going on behind the scenes. You had an unfair advantage. But this is inside, you're investing inside of a tangible asset. So now, let me start bringing this on home. So when I go back to my estate planning, and I'm looking at my operations, I'm looking at my assets, I'm looking at my business, I'm looking at my trust, all this stuff here. Guess what? Now, because I don't want to pay the IRS all this money, that's ridiculous. I have a client right now, she owes about $200,000 to the IRS. I said, what? Do you want to pay the IRS $200,000? No. Why? Because, Donald, I just don't want to pay a tax bill that high. Then I'm going to show you what you can do to avoid having to pay the IRS all this money. Have you all ever heard of a private foundation?
Yes.
Describe to me, Richard, really brief, what is a private foundation?
Um,
It don't have to be anything technical, just really simple.
I mean, just basically what it is. It's self-explanatory. Private foundation. It's just a like not a real big company. Someone who's maybe one or two people, and they have
Anybody else? Go ahead.
no. Go ahead. I'm just saying it was just one or two people, and they have a mutual agreement towards the foundation.
That's good information. Anybody else want to take a stab at what a private foundation is? No? So a private foundation is a nonprofit organization.
I said that,
It's
but I was muted.
oh, okay. It's okay. You still get it right. So nonprofit organization that is private. What's the difference between a 501c3 and a private foundation? Does anybody know?
The public foundation, they don't have a lot of like get a lot of businesses or a lot of people in the private foundation.
That's true. But from a funding standpoint, what is the difference between a 501c3 and a private foundation? Funding.
Is it that the 501c3 gets major tax cuts
No, both of them are
and
nonprofit
the
organizations.
populations?
They both have the tax cuts. You don't get taxed on what's coming into the organization. Neither one.
Mm-hmm.
They
Now,
both nonprofits.
foundations are funded by people.
Right.
And
501c3 can be funded through what?
The
People.
government.
And you said, what is it?
Government.
Government.
It can be funded by government through what?
Grants. Well,
grants.
There you go. Can I spell? So yeah, grants. Also donors. Donors like large companies like Walmart, something like that, normally want to invest in 501c3s. Private foundations normally have a hard time getting funded through those type of vehicles because it is private. I've had pastors that have come to me and they were intending to get a 501c3 set up, but because they hired somebody that didn't know what they were doing, the IRS made them a private foundation. I said, wait a minute, did you intend to be a private foundation? They said, no. Y'all don't laugh. This is just kind of like adding a little humor into it, but it's true. I said, do not ever get Deacon George to set up another nonprofit for you. Please, just because you're trying to save money.
you
I
get
knew
what
somebody
you
was
pay
gonna
for.
laugh. Because we
You
try
get
to
what
go
you pay
to somebody
for.
that we know, like they be like, oh, I know what I'm doing. I'm like,
Mm-mm.
gosh, just because you're trying to save money, it doesn't work. But a private foundation, but you as the individual can set up a private foundation to funnel money into to write off. So instead of paying the government $24,000, as we were talking about over here somewhere, where are we? Instead of paying the government $24,000, why don't I put that money into my private foundation?
Mm.
I don't have to pay taxes.
Can you put it into your 501c3?
You can put it into your 501c3. Absolutely. Because it's a nonprofit organization.
You can automatically write that off.
But just for estate planning purposes, many people don't have a 501c3. They might say, well, I don't have, because then you got to have a board, you got to have all the other things that go with having a 501c3 that many people are not prepared to have, or they don't need, that's not necessary. But from an individual standpoint, as part of your estate planning, this could be a vehicle that you can leverage to donate to and write it off on your taxes. Now, we'll say because you are believers and you do belong to a ministry, that is something that, of course, you can invest in, not invest, but donate money to the ministry and use it as a write off as well. But when you're thinking about like, if I'm building all this wealth and I'm putting money into the ministry and I have enough that I can put into a private foundation, what is the purpose of your private foundation? You can issue scholarships.
Hmm.
So instead of paying for a little um Kyle or Kalila or these names that they have now, Brandon, education, their mother could not afford it or their father, they could not. Some I had to put money into their education. I had to pay their tuition. You can have a foundation that you can actually create a scholarship for or through. I gotta replace my camera, my battery. So you can have a foundation that you can create a scholarship for through, and give money through your scholarship. Wouldn't that be better?
Yes, it would.
And you
See,
can
the
write
thing
it
is,
off.
again, from an educational standpoint, when you pay taxes, and now this is what got me. I'm being transparent with this because when me and my ex-wife, we made a lot of money, um, as a joint filer. So we were up in you know, beyond 300,000 a year. And I was doing taxes and I was like, you know, I'm starting to think like a Republican. I don't care about Democrat, Republican, okay? Just so you all would know, I am kingdom, okay? I'm
Okay.
kingdom based. I'm a kingdom
Okay.
citizen. I don't care
Okay.
about left and right, red and blue, none of that stuff.
Me either.
That's the world system. That is the
Mhm.
world system. When we come off the world system and understand what the world is doing, it don't matter what side of the fence you're on, they all crazy. Okay?
Okay.
That's how I feel.
He said they
So I
are.
don't subscribe to none of them.
Mm-mm.
If it ain't talking about kingdom, I don't want nothing to do. Let me drink my water. But no, so I realized we paying all this money in taxes, and guess what? My brother, who is bipolar, schizophrenic, is not getting benefits from the government.
Oh, what?
Hmm.
Why am I paying so much money in taxes?
Mm.
But you
Hmm.
know what happens? Because again, you hear them fighting in the government about immigrants. They come over here and they say, I'm disabled. They get a disability check. See, now y'all got me preaching. They get a disability check. Your money that went into the system to pay for them to come here and lie and say they need disability.
Hmm.
The same ones that's doing your fingernails are the same ones that's collecting disability because they know how the system works. And I audited. See, this is why God put me there to audit these companies to understand them. I audited Social Security Administration and they said out of their mouth, it was almost like, can you repeat that again? They said, we pay first and then we research later. Hold on. So you mean to tell me y'all give money to anybody that want it, but when you find out that they didn't qualify for it, now you're coming back after them and they will come after you for their money. It could be $200,000.
Yeah.
That's your money that you put into the system.
Hmm.
Crazy.
So when we look at the tax system, and I said they're the biggest capitalists, they're the biggest robbers of your income. Your that money that you could have been putting into the community could have been leveraged the way you chose, but they said, "Oh, we putting your money in Social Security," but they're distributing it to the immigrants or to people that don't qualify.
Mm-hmm.
then that leave you with no money to invest in. So what do they talk about? Wealth gap. Oh my God. Now we talk about the wealth gap. Now we got to make sure that everybody have the same amount. You know, it's not fair that people wealthy, they need to be given to the poor. Well, let me tell you something. If we created our own system, our own estate plans, like I just showed you, that money, it was intended. The system is set up for wealthy to share the money with the community. And they do. But we need somewhere for them to put the money. A 501c3. Or you being the wealthy one saying, but or not even wealthy, but just having money to move around and say, look, I'm gonna have a private foundation. And I can do a benefit gala for people that are dealing with bipolar or schizophrenia. You see what I mean? That we don't have to worry about if we focus on community, building community, people will donate to the community.
I
But we
like
don't understand the power of that. The government steps in the middle of all that, and we're like, man, the government not putting the money where we need it to go. Like even child support. Child support. Let's say, for example, so me and my ex-wife got a divorce. Our son is now 17. She knows how this stuff works too. So we both have very common knowledge. You're probably like, well, why y'all get a divorce? I don't know because the enemy came in like a flood and wreaked havoc. And if you don't have people that understand it, that's praying in your household, they're not going to see it. But look, the thing is, she could have said, I'm taking the child support, but she understands how it works. I hired my son in my business. What did I show you as a write off as a business owner?
I need
Ooh-wee.
all of this,
Mm-hmm.
all of it.
Employer.
You can hire your child. If we understood this as a community and we taught, have a business. I don't care if you fix toilets, fix toilets. I don't care if you put a roof on a house, put a roof on a house. Hire your child in your business. We don't need child support. We don't need the government getting involved in our personal affairs, our family affairs. Hire your child. Guess what? That incentivizes somebody to pay their child. What's the amount of it now? Linda, what's the amount?
15, you're talking about minimum wage?
Uh-huh. No, not for minimum wage. What is the standard deduction?
Oh,
The
no,
stamp
She didn't she didn't know she had to work today.
for what? Single or head of household?
Single. Standard deduction.
Single, what is it, like 12?
I know it's 15,000. Hold on, I got it.
15?
15,750.
Mm.
So 15,750 a year. Your child don't need to pay taxes, income taxes on that money. They pay Social Security and Medicare, but they don't have to pay income taxes, federal or state, if you pay them 15,750 a year. Nothing above that.
Wow.
Right.
A year. Isn't this a great way to build wealth for a child?
yes,
Yes.
yes.
So if we taught about having a business and you're like, hey, let me start a business. Let me figure out how to build a business and hire my children in the business. I can pay my children a paycheck. They don't have to pay taxes. And guess what? When little Kalila want her nails done,
She
she
got
want
it
an
all.
outfit, baby. Look, that's a write off. Use the money I'm paying you.
Mm-hmm.
My son wanted a new pair of Nikes, the all white ones. I forget what they call. What do you think he did? Use his
Use,
money.
use this
Mm-hmm.
money.
I'm like, that's a write off for me. You need a drum set? Buy it. Save, but also put my look, you so my ex-wife understood that. So she like, yeah, hire him for the business. We don't have that problem. Oh, he need food? There you go. You want Outback? order to write off. Okay.
I think, I look at this now and I think about how for so long that we've been in the dark about a lot of things with finances, and how we've never really been taught about everything that you've taught us tonight and shown us has always been there, but we've never been exposed to it. And I was sitting here thinking myself, I said, I could have been a billionaire by now.
You see how much taxes you paid? Yeah.
Yeah.
So
I
let me
think
tell
about
y'all
that.
something else that's a trick, okay? So now that we got a divorce, people say, well, I know you'll buy another house because I sold my house. I sold our house. And I said, I will never buy another house in my personal name. Because what do we do with our personal residence down here? Like we talked about, that's not
And
That's
an
not
asset.
making us money. Yeah.
It's not an asset.
Mm-hmm.
But what I would do is buy a property here, but I'll say it's my personal residence. I'll move it up here. So I'll take it from down here. But technically, this personal residence would be my investment property.
Yep.
Why?
Rent it out.
Because I will set it up under LLC first, then rent it to myself.
Wait a minute.
Let
Wait a minute. Okay. So
me get my water.
I'm gonna buy property, but set it up as a LLC
Under your business. You're gonna buy it under your business.
under my
Business.
business
Yes, buy it under your business.
and then rent it out to me.
Yes,
Yep.
you can be the renter.
Hmm.
Because technically, and Linda, you can vouch for this, because when it asks you, are you using this property for your personal use?
Yep.
It's referring to you being the owner of the property, you being an owner.
And you're
Mhm.
not. It's your business.
Your business owns the property.
Yep. He's right.
This is a wealthy conversation. This is wealth building. This is investment.
This is transferring wealth.
This is
Yes.
transferring
It's-
wealth,
It's generational wealth.
generational wealth.
I'm glad my
This is
children is on this
They don't teach this stuff in school because they don't want you to
Mm-mm.
know. Remember, I told you it's written in code. So let's say, like, for example, you say, well, Donald, I already own my house. This is normally the case. How can I make my personal residence now an LLC? See, they know that people, when they find out this information, the bank typically say you need to pay off this loan before you do that.
Mm-hmm.
Mm.
Idiots. But what happened is
Wow.
when I told my white client this, because he found out when I showed him this, he said, Donald, that makes sense why my neighbor sold his house to his business
Mm-hmm.
Wait a
and
minute.
then rented from the business.
Was that while he still had a mortgage?
He
Now
sold
that I didn't know all the details, but he could have had a mortgage, but sometimes it's difficult because the mortgage company trying to hold you captive to that mortgage to prevent you from doing it that way.
Right.
So you try to figure out why is that? Because they know the power of this situation.
And plus the interest that you're paying on the money you borrowed for the loan to buy the house. I guess.
It's gonna be
That they won't be
different for
making, I guess.
business owner. Right. It's
So
different
if you
from a
sold
business.
that house to your business, imagine how much you could make off that sale.
Mm-hmm.
See, I have a client right now. He's a doctor and he's in Alabama. We grew up as friends in church, and I haven't talked to him for years. And you don't care about my age. I'm 51. I think he's 50. And so he said, Donald, I need you to do my taxes. This is the
Mhm.
first year that we've talked since he left to go to college and moved to Alabama to be a doctor. But he see me on social media and he said, Donald, I need you to be my accountant to do my taxes. He told me yesterday that his tax person got him owing all this money in taxes after he sold his house. I
How?
said, wait, hold on. You paying capital gains tax for your house after you sold it? And he said, yeah. And I said, wait, how much did you sell the house for? Or how much did you make as far as selling the house? And he told me. I said, but wait a minute. If you only made X amount, so 250,000 profit single. He lived in this house. Cause I had to go through the checklist to make sure I understood like what I could say to him before I gave him an answer. Because remember, I'm an auditor too. So I'm like, look, I can't give you no guarantees till we go through this questionnaire. How long did you live in the house? Did you you know, stay in there for such time? Yeah. Okay. You're a single filer. What was your how much did you make off the sale? And he told me it was like 120,000. I said, wait, the government allows you up to 250,000. He was like, you mean to tell me I'm paying taxes on something I didn't need to be? Uh, yeah. I said, that you can Google that answer.
Yeah, he had the wrong person.
He had the wrong person, Linda.
Mhm.
So when I choose an accountant, when I choose a tax person, I want someone. I don't want to do taxes myself. I'm saying if I'm that person that's hiring the person, but educate me enough to understand what you're doing. This is why I've been working with Juanita for so many years because I try to help my clients understand what they're doing,
Yes,
not
thank you.
just yeah, not just here. I'm gonna do this, but I want you to be empowered. So what I did tonight, I educated you on options. Now, if it's still in your whole, mindset to invest in stock, then we should have that discussion. If it's still in your that was really the only thing you really talked about. But if that's something you really want, then fine. But I'm showing you how to design your estate plan to give you some background in how this all works from an educational standpoint to understand if I go this way, this is how this is going to work. If I go this way, this is my options. And maybe you're not ready to invest in real estate right now. That's totally fine. But how can I get set up to prepare for it? This is like buying a house. If I want to buy a house, I can't just expect to buy a house tomorrow. I gotta prepare to buy a house. So I tell my clients to own a business. Tell me that you're about to buy a house next year because if you are, me as your accountant, I need to know. I work with lenders because I know what they're looking for, what they're asking for. But if you think it's going to be an overnight process, it could be a year process. It could be a 2-year process. My client owes money in taxes and she wants to buy a house. I said, well, what is the lender asking for? Because you cannot get on a payment plan tomorrow. Because if they want to see the IRS authorize or approve the payment plan, you're not getting it tomorrow. It may take 6 months, and you want to buy this house before the end of summer, which is September. You want to buy this house then, but you're not going to buy this house if that's what they want. Now, on the flip side, as your accountant, I can write a letter that they can honor potentially, and if they don't honor it, go to another lender. I got plenty of lenders you can go to. They'll take your money. So yeah, it's Linda's laughing, but it's true. So when we look at this scenario, this setup, this estate plan, it gives you empowerment to go back to your finances to say, okay, let me reevaluate this. Let me invite Donald back because I need to understand a little bit more about this particular area. How can I move into this? How can I shift into this potential area? get the right attorney, get, what do I have? Find out where I can go from here. But I'll wrap up. I digress. Are there any questions that I can answer? Was this helpful?
This was very helpful to me. I just opened up a daycare center under my name, LLC, King's Kids
Congratulations.
Academy LLC, but it was my mother's daycare center, but it was under the church. So it was
Okay.
Faith Christian King's Kids Academy daycare center.
Right.
So even though she gave me the daycare, I was still under the church.
Okay.
And so the church is a 501c3, and there's a lot of perks with that. Like I didn't have to pay unemployment and stuff like that,
Right.
tax.
Mm-hmm.
But now that I moved from under the church and I have my own EIN number, and now my LLC, it's kind of different, but now I see options. I see what I can do now. It's eye-opening.
I'm glad it was.
Now that the church
Mhm.
is a 501c3 now, I'm thinking, okay, yeah, I can put money into the church and
And
da 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 da. And I
See,
do that, but didn't know that could be a tax write-off.
Yep.
that's the thing. When we and for the audience that may not know this, you see me drinking this. This is sparkling water, Saratoga sparkling water. Just so you all know, Donald's not
That's right.
drinking beer or nothing.
That's right. Good stuff.
Just so you all
That's
know.
James. That's James.
Good
And
stuff.
what's crazy too is that people don't know what that stuff does to your body. So like for me, the doctor found out that my eggs enzymes or whatever in the liver was too high as if I drink. I'm like, I don't even drink. What are you talking about? And so I was like, I can't drink if I wanted to. And I want to preserve my liver. My dad drank enough for me and everybody else. And he's no longer here, and I'm okay with that. Trust me, I'm okay. So y'all don't have to say my condolences because that was over 20 years ago. I don't even know how long it's been. But
Good.
God rest his soul. But I know what that stuff can do to your body. So for me, if I can drink more water, I'd rather drink more water. But I said that. But to your point, Pastor, if we empower people to understand that, you don't have to beg people to give
Mhm.
because it's a community. If we understood the power of community and how we can leverage it. But what happens is a lot of people are being eaten up by the tax system. Why? Because they complete this W-4, and I've seen young people do it. When we were young, we got a refund.
Yeah.
These young people right now are owing money in taxes.
Yeah,
Mhm.
because they don't know what they're doing. And
No, and it's not so much they don't know what they're doing. That W-4 is weird.
it's
It
different.
is. It's
Yeah,
confusing.
You can't put
the new
0,
one.
you can't put 1, you can't put
Mm-mm.
nothing. And you complete it, next thing you know, well, why owe taxes? And I say, I think the calculation is screwed up. I don't know why you owe taxes. You can't choose nothing except you're single, you're married, filing joint, but you still owe. And so maybe they have multiple jobs. It just depends. There's some, other things that go into that discussion. But yeah,
Mhm.
but how can they afford to donate more money?
Mhm.
Because the system is robbing them of their money. But yeah, so if we understood the power of donating to nonprofit organizations, it'd be more money pouring into a ministry,
Yes, yes. Mr. Butler, speaking of young people, what do you think about junior achievement?
Junior achievement, tell me what that is.
Okay, it's they have one in Salisbury. It's a nonprofit, and they have them in different areas too, but their main purpose is to teach financial literacy to young people, but it's mainly for financial security or generational wealth for families, and they're a nonprofit. They have one here in Wacomico County.
I've seen that. Yeah, I've seen that name, and I looked them up, and they it is a
Mhm.
nonprofit. But what do I think about them? It depends. I mean, they may have good programs. I'm not, I don't know enough about them to say if it's good or bad. But they educating young people. I mean, could be some good to it.
Mhm.
But I haven't assessed their program to see what they're teaching. But normally, they're not teaching what I just taught you.
Absolutely. But yeah.
Yes.
But I
Yeah.
was thinking
Well,
about looking into that, for, and see just what talking to whoever it is there, just to see what they're talking about, what exactly they are doing. Mhm.
Yeah. So yeah, they introduce students to the essential costs related to buying and operating a first car, creative problem solving, so be entrepreneurial strategies, business planning, think like an entrepreneur, BizTown, they got BizTown, whatever, accord.
Mhm.
And what's interesting is, and I'll share this with you all because as Pastor prayed earlier, is like, what is God saying about his people as we march into the future, right? Um, I get a sense of Moses delivering the people from Egypt. When we see all these layoffs, migrating to AI, that's a whole nother topic. But when we see all these layoffs and people are, being pushed to start a business, for example, um,
Mhm.
what is going on? And I get a sense again that we're being delivered from Egypt. That there's a sense of freedom. And people murmur and complain about the freedom because they're used to being fed by Egypt. They're used to the lifestyle that Egypt provided them. And now there's more freedom. You can choose to build however you want and build systems. I think if I was to look at, as we would call it, the end times, it's almost as if this period is the calm before the storm.
I believe it.
Yeah.
This is the calm before the storm. What are you doing now to secure your future?
That's why we had this class.
What are you doing now to prepare and knowing your options? Because if I may, I'm gonna take this off recording at this point because I don't want to record too much more. So we're ending the recording officially.